traders, welcome to the TMT Stock Market Strategy video for Monday, May 16th. We did get a push lower late in the day, about 1:30ish, at least in the afternoon session, and that made a nice little move lower, which was good for the traders, the day traders. If you identified the day, remember, as a professional, you need to identify the day. What is happening here? 5-minute S&P, do a 10-minute S&P, 15-minute range. We're inside of it. Nothing is going on, right? And you could have, looked to try to short something here, but a lot of the indicators that I look at intraday were telling me not to get short here. Sure enough, we rallied to the upper end of the range, and then we shot back down. We bounced again, real slightly, and then we shot down and broke the 15-minute range. That was telling me that was a lower high from this previous high, at the opening, that we were indeed headed low. It was just a matter of the break. Now, you had to watch that break, okay? Here's that nice little flag, and that's where you want to really look to get in that short. And you can see here, again, and then that was a little bit, come to the end of the day, we just kind of drifted and created another bear flag, a bigger one, maybe looking for that bounce lower. But, yeah, not a bad day yesterday on Friday if you were paying attention. Remember, guys, this market is not easy, especially if you're new to the game here. You need to really identify and sit on your hands and when is the opportune time to get into a trade, okay? And make sure you follow all of your indicators and your trading plan. And we really lay that out in a premium video for $49 a month. We have all the actionable areas, the levels, and we get extensively into the indicators that I look at. So check it out. Go onto the website. Believe me, it's well worth $49 a month. All right, so there's that 5-minute, right? Now, what am I looking for? Well, this week is options expiration monthly, so therefore we usually have a bullish bias to the upside. So I'm looking for some sort of a low from Friday's low. Maybe, just maybe, they might hit them one more time, but I am looking for a low that'll hold up all through this week, and then we'll probably grind higher, maybe chop around a little bit, but probably end the week up, slightly up anyway. But I think next week and the week after is when I'm going to probably end up calling a top if, in fact, nothing changes. As we all know, technical analysis changes rather rapidly, okay? So let's dive right into it. I want to show you a couple things. Here's a 2-year yield, and you can see it just really got crushed. And that's what's happening with the yield. Bonds are starting to rip higher, and the banks are not doing well. You could see that here. That's the yield. You could see that when the yields go lower, obviously the banks don't make any money. So you could see that nicely on that break, that little bear flag on that 2-year yield curve. So I'm looking for maybe a little pop, a relief rally, and then fail. And I just want to show this to you. Here is the BKX, the banking index, okay? There's a nice little head and shoulders pattern here that kind of breached. Now I got a shorter shoulder, not as symmetrical that I like to see, but nonetheless, we do have a nice little head and shoulders pattern, and it is confirmed. Now, we are on the 50-day moving average. A little too close for me. I'd like to see this kind of back test a little bit before we look to start selling banks. And besides, the banks are, they've been breaking down a little bit. That does not bode well for the bulls as far as a new market rally. We need banks and financials to rally, and they are not rallying here at the moment, okay? So, anyway, let's go into the next chart. Here's another concern of mine. It's the semiconductor index, the SOX, S-O-X. Beautiful move from February's low, and as you can see here, we have done nothing. But 630 is not going to go unnoticed to the managers, the fund managers. Here we are in a nice big horizontal channel. Once that breaks that 630 on a closing basis, give it 2 closes below, and look what's happening to the RSI. Or everything is trending lower. Bearish symmetry, making lower lows and lower highs. You could see that here. You could see that in the stochastic. So this is not a good sign as well, because we need technology, banks, and financials at least to start leading the charge here for a new renowned rally. And doesn't look like it might not be happening. So not a good sign as well when you see this. Okay, here is the NYUD, and I like to see this because it has volume incorporated with this. Look at what's happened. I just want to show you briefly, and we're not going to get into it too much, but you could see when the market rallied right here, right, we got a nice pop well above 3 into the 350. Same thing here, like we had in September, October, right? We rallied up, bam, beautiful, beautiful. What's happened in this now little pop up here? Didn't even get above here. So we have a lower high from this previous high here, and then now we're below zero. And I want to show that to you. You could see when we're below zero for quite some time, look what happens. Bam, big sell-off. Bam, big sell-off. You see that? Okay, and now what's happening? We're starting to get below zero again. So I am looking probably to anticipate another sell-off. Stocks, S&P, and the ATR, the average true range. Let's look at some volatility. You can see here that the average true range, every time we get into these areas, this is really extreme, but I have this one labeled more in the blue. You could see I put the horizontal line. Every time we start to tick, we're at these levels at 18 to 20. Look what happens. A sell-off. Bam, a sell-off. And here we go, a rise in volatility again. See, same thing. You could see as we started to rise volatility, well, we had a market sell-off, and then again, volatility collapsed, and then we ran all the way up there. That was back in the end of 2014. But you could see that clearly, guys, that we're at these danger zones where the volatility is very, very muted, very weak, not weak, excuse me, but very low, and that's something that we need to take note of. Here's the VIX. All right, let me just move that up just a touch. Now, Bollinger Bands are tightening. That means that energy is building. You could see that clearly here and here. All right, now if we break out and then we do a quick back test, I think you're going to see the VIX explode when we really get a good move lower. I do think that the VIX is ready for another charge higher. And you can see what we have here. Look what's happening. We have positive divergence in our stochastics. Okay, we have positive divergence in RSI, higher highs and higher lows, and we have the Bollinger Bands pinching. So this is ready to explode. Now, it could go lower, of course, but from what I'm showing you, it looks like we'll probably the VIX will go higher, and that will create a sell signal for the markets. Let's look at some charts now. Spiders Weekly. We've been above this line, and I've mentioned this to you many times, since 2012. Now we can't. We got back above it, but we failed. Can't even get above it, and now we're starting to fail again. You could see the RSI starting to curl over again. And again, guys, this is not a good sign. This is something that needs to take notice. You've got to be very, very careful here in this market. Spiders identified that head and shoulders pattern. You could see here on that right shoulder. I said, hey, guys, is that a right shoulder? And I put question marks. You can check that out on YouTube. We went extensive into the premium video, and we had some great levels. And you could see here, valid now, but only valid when it breaks below. We got the pattern identified, but has not triggered yet, right? So we need to break below that neckline. That'll come in at 204.21, rounded off to 204. Target on this is 196, which coincides nicely, and I'll show you why. I put a Fibonacci from the high to low, and there's the 50% retracement. So that coincides nicely. Half of this move is pretty much that should be it. If we're going to move lower and we just retrace, it should be 50% if this market is healthy and we're ready for another leg up. That's healthy for the markets as well. But we'll see. When we get some sort of a pullback, a correction, then that turns into a full-fledged sell-off. So let's keep an eye on this. It's going to be very, very interesting the next coming weeks, guys. Okay? Here is that 60-minute where I pointed out where you should be looking to sell on the bounce, and that was at 61.8% retracement, 76, and then, of course, that 50. And it broke right to the 76.8 and then failed, and we did get one more move to get in. But you could see here, RSI MACD is just not telling us anything good here to the upside. Okay, is that 60-minute. Here's the weekly. As you know, identified this head and shoulders pattern weeks ago. Now we broke back below the neckline again. Very dangerous. And I mentioned also on Thursday, fund managers will know when this thing breaks below the 200. Now on the daily chart, it's broken. Okay, now this is a 200 week. But on the daily chart, we have broken below the 200, and it has an M formation, which I wanted to show you. Has an M top formation. Let me just draw this out for you again. Okay, I'd like to see that right shoulder a little bit low, but that's fine. Here's your neckline, and we broke in the neckline, and we also broke that 200-day moving average. Target is 127.17. Now, the bigger picture is that head and shoulders, that bigger head and shoulders that I was showing you on that weekly chart here. All right, that target is 108.50. And that also cracked again as well. So M formation, bearish, weekly IYT, transportation ETF, head and shoulders, bearish, and that's our leader. So this is very, very troublesome for the markets here, okay? IWM weekly, a secondary leader, head and shoulders, again, The neckline is sitting right on the neckline from Friday's close. We have the 200-day moving average that we need to now get through, and then that would be the target would be 89.22 on the IWM. Okay, that's the weekly. Now the daily doing the same thing, broke below that 200-day moving average. Not good, guys. We've broken through the 200-day moving average on all of the indices. Okay, here's that 15-minute chart I wanted to show you. That what we show our premium members, and this shows you exactly where we look to short the 61.8, and these are the areas here. So very interesting. Like I said, come on in, take a look at it. I'm sure you'll be pleased. Here's the Qs. The last chart is the Qs, and you can see here it's below its 200 as well. Really not doing well. And technology, semis not doing well. That's going to be your target there, that 207.70. But if we could get back above the 200, you might get at least a little reprieve rally to challenge those highs up here. If not, look out for the 102.70, and then of course the bigger target would be 97. Hope it helps everybody. I know it's a little bit long, but it's Monday. I want to get that information out to you. Look for a slight bullish bias for the week after we put in a low, and next week and the week after was going to be very, very interesting for the markets. We may be calling a market top. Have a great day. We'll speak to you tomorrow.